$10,000 an ounce gold is coming. The question is, will $20,000 or $30,000 an ounce come? That's a scary world. It's exciting for stackers, but terrifying for basically everybody else. We kind of entered that death spiral part of the process where we're having to borrow to cover our debts. If you and I were doing that, then we would be headed for personal bankruptcy. And the governments of the world are doing it. There's no reason to think that a similar kind of process is going to work out for them.
Hello and welcome to Soar Financially, a channel where we discuss the macro to understand the micro. My name is Kai Hoffman. I'm the EDGAME mining guy over on X, and of course, your host of this channel. Really looking forward to welcoming back an old friend of Soar Financially, John Rubino of Rubino.substack.com. Really looking forward to catching up with him. We had him on about mid-December last. And of course, as you all know, no big secret here, we've got lots to catch up on. John made some really good predictions here. He talked about gold's strength, the US debt spiral being out of control, but also stealth war and just global instability, which has, just ratcheted up and really hasn't stopped spinning yet. So lots to catch up on. We need to figure out where are things headed, because a couple of things that haven't happened yet is that the miners followed gold. We're in earnings season right now, and we'll discuss what we can expect from some of the mining stocks here. So stay tuned for that. Towards the end of the conversation, we'll hone in on the micro. So really looking forward to that. But before I switch over to my guest, hit that like and subscribe button. It's a free way to support us, and we tremendously appreciate it. Thank you so much for doing that. Now, John, welcome back on the program. It's good to see you.
Hey, Kai, it's good to see you too. Yeah, and you're right. A few things have happened since we talked last in December.
Just a few, No, John, you usually ask, what's the status of the economy and the financial markets right now? But that's too simple of a question almost, We've had you on a few times, so you were talking about a debt-fueled financial collapse, stealth world war. Where are we now in that regard? Based on your predictions, what has played out and how are things?
Well, things are happening on different levels right now. You've got the plain vanilla economic trends out there, which are heading for a slowdown and maybe a recession, because we basically we spent all the extra money we saved during the pandemic, at least in the U.S. And that money is now gone, and Americans are loading up credit cards to pay day-to-day bills, and that's charging them 25% interest. And so we're an economy that's headed for a consumer spending slowdown driven recession, more than likely. And that's kind of that's a normal thing, and then but zooming out just a little further, you've got kind of the revolution that's taking place politically in the US. And there's no real way to know whether tariffs, for instance, are inflationary or deflationary, because they kind of raise prices in the short run, but they also slow down economic activity. The Hoots-Molly tariffs are blamed for the Great Depression in the 1930s. So, we just can't know what the impact of Trump's policies are going to be, at least in the short run. And then beyond that, you've got all kinds of crazy geopolitics and stuff going on out there. Europe is just a lot of stuff is happening in Europe, and a lot of it is very hard to predict. Every election now seems to bring the Trump MAGA version of whatever European country it is closer to being in power. And the European Union is a very big economic entity, so we have to pay attention to what happens there. And what's happening there is a major political change that the establishment is fighting with tooth and claw, just like they did here in the U.S. They did all kinds of unethical things here to try to keep Trump out of power. And the establishment in Europe is doing the same thing. And there's no way to know what the economic and financial impacts of these things are. And then, we one step up in geopolitics. The Ukraine war is still going on. India and Pakistan are kind of fighting with each other right now. And then the Middle East with Israel and Iran is nowhere near settled. We're still talking about maybe bombing Iran. So add it all up, and you've got a very unpredictable world right now. And maybe we have inflation in the next year. Maybe we have stagflation with the economies of the world contracting with prices going up. Or maybe everything is deflationary. There's no way to know, and That is a very big intellectual challenge for people who want to invest into this market, and it's making it interesting, that's for sure.
100%. My head is spinning like it's on a swivel. It's currently just constantly. Like I mentioned it in other podcasts, but I actually I subscribed to a newspaper again, like a physical one, because that way I can pretend to stay on top of things. But it's impossible. It's impossible. At least I thought I'd have all the topics in one location, but it's impossible to keep up, as you said. India, Pakistan, Israel, and Iran, just on a geopolitical level. But overall, I think to summarize what you just said here as your intro, uncertainty is the main term. And that brings me to gold, immediately to gold. We can drill down and hone down on some of the topics here, but is that what you just described, the major uncertainty, what drove gold to $3,500?
Well, gold is where we hide out in times of chaos, and so that's one explanation for gold going up. People just don't want to be exposed to any more risk than they absolutely have to be. And that leads people to buy things like gold and silver. Plus, you've got the BRICS thing going on and this predates a lot of the political turmoil in the US and Europe, but a lot of countries have just gotten sick of the US using the dollar as a reserve currency weapon against them. So they're taking steps to protect themselves should they have to go back to some kind of gold standard or just start bypassing the dollar in trade. And so their central banks, especially China's and Russia's, have been buying gold aggressively for years now, and they haven't been very price sensitive. So that, in part, explains why the price of gold has gone up more or less steadily, while other things have bounced around in such a crazy way. And then you've got the Basel III thing going on, where global banking regulations have changed, and gold's status has been upgraded from a tier 3 asset, which you had to hold reserves against gold if you wanted to own it if you were a bank. They've upgraded it to a tier 1 asset, which is the reserves that you hold against other assets. And because of that, a lot of the banks in the world are accumulating gold alongside their treasury bonds and their US dollar cash as tier 1 assets. And they don't seem to be too price sensitive either. So that's kind of why gold, add all that up. And that's why gold pierced $3,000 an ounce so smoothly. Normally, you would expect that to be massive resistance, right? Because traders, humans in general, but traders in particular, like big round numbers. And when an asset gets near a big round number, you expect a lot of trades to be input there. And when something is going up to hit that number, then the trades are sales, and they knock the asset back down. It took gold like 4 years and multiple attempts to get beyond $2,000 an ounce. And this time around, it just blew right through 3,000 with no trouble. So anyhow, that's in part why. There are just a lot of reasons for people to be buying gold and ignoring the price as they do so. Now, whether that continues or not, there's no way to know, but that explains the recent past.
Absolutely. No, it's as you said, like, so many factors pulling on gold right now. Like one thing I'm still trying to figure out, you touched on India and Pakistan, because if that blows up, which we really hope it doesn't, but India is a big gold buyer, for example, like what that does to the gold price on that level, because that country alone could have a huge impact on the precious metal itself. Just as a side note, John, I'm jumping around a little bit, and I have to apologize for the audience that it's not a structured conversation as I usually hold them, but we got to come back to the U.S. Liberation Day, April 2nd. Lots been going on, but if we look at just the three tier 1 assets, bonds, cash, and gold. Gold is the only one that performed, and I just spoke to Lynn Alden about an hour and a half ago, John. She called it third world country behavior. Currency and bonds down, gold up. What do you make of that?
Well, yeah, I absolutely agree with that, because we know that we're inflating away and generally mismanaging all the big fiat currencies, right? So that they're losing value is to be expected just based on the amount that we're creating. And that's been the case. We've had inflation in the West and parts of Asia for a long time. And that's cash going down in value. And that's also bonds going down in value, because all bonds are is proxy for cash. They just pay you cash, and that's where they derive their value. So no surprise that everything else left off the table, just our financial mismanagement of the past 30 years, should be leading cash and sovereign bonds to lose value, both in nominal terms and relative to gold. So yeah, we are creating basically a banana republic world right now. And almost nobody is immune to this. Basically, Russia is the only country that's not really debt ridden, and I guess Switzerland, although they're more like a banking sector that calls itself a country. So, but Russia's a major country, and they don't have a lot of debt. But everybody else, we're all wildly over indebted. We all have to create huge amounts of new currency in order to manage our debts, and other things being equal, that's going to lead the currencies and the bonds that are based on them to go down in value over time. Now, gold is probably the end point of this process. We're going to have to, at some point, declare a new Bretton Woods agreement that might be a flat-out gold standard, or might be something that's some kind of hybrid standard. Who knows what they'll come up with and whether it'll work, but gold will be involved in the next financial system. So if you're a central bank or an individual investor, you really want to own some of it, right? Because it's the bedrock money of whatever comes next. And so that gold is $3,000 an ounce is, it's surprising that it happened this fast, but it's not surprising that it's there. And the people who run the numbers of what gold has to go to in order to actually be able to back the world's fiat currencies say it's got to go a lot farther. 10,000 is the minimum number that you see when people are talking like this and running those numbers. So $10,000 an ounce gold is coming. The question is, will $20,000 or $30,000 an ounce come? That's a scary world. So it's exciting for stackers, but terrifying for basically everybody else if we end up with a world where the fiat currencies are so devalued that gold is now $30,000 an ounce. But it's a completely feasible, completely possible world, which is why we should all be acquiring precious metals.
Absolutely. Let's assume $30,000 gold. It will go there. Let's just, for simplicity's sake, we're trading at $3,000 gold. So we're still, or 3,500, like semantics here. But my point is, are we at the beginning of the financial collapse? Are we seeing that right now? Are we in the middle of it? What's sort of the timing on that? And how big are the cracks, John?
Well, I think you can say that we've entered a new phase in the process just lately here, when we had to push interest rates up because the amount of debt that we'd taken on over the past 30 or 40 years was causing inflation. In the US, we had double-digit inflation officially, almost, in 2022. That caused us to push up interest rates, and that caused the interest costs on debts around the world to spike. In the US, we've got, what are we now, like $1.5 trillion a year in interest on the US government's debt. And that money has to be borrowed, which means the succeeding year's interest is going to be even higher, and so on. So we've kind of entered that death spiral part of the process where we're having to borrow to cover our debts. If you and I were doing that, then we would be headed for personal bankruptcy. And the governments of the world are doing it. And there's no reason to think that a similar kind of process is going to work out for them. They have printing presses, but we have access to credit cards, you and I. So maybe it'll be just like what will happen with us, where the repo man shows up and assets start being taken away, and the system as we know it breaks down. But I think we are in that new stage where interest has to be financed, and it's growing exponentially because of that. So you could call that a death spiral. I think historians will look back on it and say, yeah, that's when the terminal phase happened, 2023.
No. Is there any way to break out of it? I know the new government is trying to sort of break out of that death spiral, tariffs, trying to sort of counter steer what's been going on for decades. Obviously, it can't get fixed tomorrow. I think that's obvious. It'll take some time, maybe even decades. But are we on the right track? Are the right policies being implemented? I don't want to get political. That's not the point. It's really just trying to understand, is there even a way out of this?
Well, if we're speaking just of the US right now, Trump's doing a lot of really good things, but at the cost of a lot of chaos, kind of overlaying on the good things. Um, but accomplishing the good things like, the US government and the public private sector here, were basically just a big money laundering scheme to help the political class. And the fact that we're finding that out and we're taking steps to stop it, that's incredibly good. And the fact that we're aggressively trying to get factories to come back to the U.S., that's all good too, But there's only so much you can do to control spending when you reach the point where we are now, where the government's debts are above 100% of GDP. Interest is spiking, and it's not just the government; it's every other sector in the country. The corporations are over indebted, individuals are wildly over indebted. So there's no real way to fix that. In other words, to implement some policies that painlessly take us back to organic, steady, non-inflationary growth, you can't get there from here. So we basically have to have some kind of a crisis that's related to all of our debts and the interest costs of that debt. And then we have to do, the Jim Rickards currency reset thing in some way. So, there's no way that Trump and his people succeed if success is defined as a return to normalcy in the short run. That just can't happen. But we can lay the groundwork for a healthier society when we do the currency reset, because there's no guarantee that a currency reset is even doable at the place we're in now. But if we can be resilient enough to up the odds of, devaluing the dollar dramatically and linking it to gold without bankrupting half the country, then we have succeeded in a realistic way, in a way that we actually can succeed. So I think there's a chance of that still happening. It's interesting seeing what a lot of people are trying, or at least the goals that they're pursuing, because they're good goals. And if we achieve some of them, then we have a chance of coming out of this without a revolution and absolute chaos.
Devaluing the dollar, you just mentioned potentially backing it with gold. But before we get to the backing with gold part, like, where do you see the dollar, or where does the dollar need to go in relation to other currencies? Right now, the Dixie's roughly 100. What do you think the trajectory is here, and what does it need to be, and what does it take to get to a more balanced currency system?
Well, I think it's not really helpful to look at the currencies versus each other because they're all declining, just at varying rates. So, I mean, if you're a trader and you want to short the euro and go long dollars or vice versa, then yeah, it makes sense to look at who has what momentum and everything. But they're all doomed. All the big currencies are going to decline at an accelerating rate until they cease to exist in their current form. But their rate of decline at any given time is going to differ. And a lot of the stuff that we're doing in the U.S. right now is potentially bad for the dollar versus other currencies, because maybe it's sending capital out of the U.S. and into other currencies. Maybe people are upset with what Trump is doing with tariffs or whatever, and that's causing other countries to pull capital out of the U.S. and move it to other places, and that makes the dollar go down versus the euro and the yen and the yuan and maybe the ruble. But that's kind of a sideshow to the big story, which is that we've all just ruined our financial systems, every major country. We've all taken on too much debt, and the consequences of that will be declining currencies going forward. So, whether the dollar goes down versus the euro right now, let's say in the next year, doesn't really change most people's investment thesis, right? If you want to get beyond fiat currencies in general, then you're not really caring in the short run whether the dollar or the euro is the quote unquote strong currency in any given year. You want to be moving into real stuff. So you want oil and you want uranium and you want gold and silver and farmland and stuff like that. No matter what happens to the US dollar index in the year ahead, I think that's still in place. We still should be moving towards real assets maybe at an accelerating rate lately.
You know, one thought I can't get out of my head is like it sounds like you're saying that the world is being rebalanced right now before the reset button is being hit. Meaning, once the reset button is being triggered, that the negotiations are more balanced per se. Is that a fair way to say it? Like right now, we're reshuffling the deck, we're resorting the world order. A new world order, to sort of hit the reset button so that everybody's on a more level playing field, that it's more fair. Does that make sense?
Well, I mean, fair is kind of in the eye of the beholder. And I think what Trump is trying for may not seem fair to his trading partner victims. but yeah, I think, see, we've spent the last 40 or 50 years running an experiment with fiat currencies and globalization. And those two things turned out to be an abject failure, especially when combined. So now we're giving populism and mercantilism a try, where people are being elected all around the world, or at least having really good electoral runs, on a platform that says you're being screwed over by a handful of corrupt elites. Elect me, and I will get back for you what was stolen from you. And that the policies that flow from that can take all kinds of forms. You can have left-wing populism like Bernie Sanders, or right-wing populism like Donald Trump, and you get totally different sets of policy initiatives. But the animating factor there is that it's people who are trying to restack the deck. In other words, start moving assets away from a handful of very rich aristocrats and towards the rest of the country. So, that can be chaotic, and it's not clear how it plays out, or if everybody succeeds. Maybe one country will try it and fail. Latin America tries this a lot. Similar kind of political platform that gets people elected, but then it tends to lead to chaos. So there's no guarantee we succeed with any of this. Trump might be a horrendous failure 3 years from now because none of the stuff he did worked. But the goals, I think, are correct. We need to bring manufacturing back to the major countries of the world, because if you don't make stuff, you're barely even a country. If you have an open border and you don't make stuff, you are absolutely not a country. And the U.S. was in real danger of having that happen. And so is Europe right now. So, a lot has to happen. We're just in the early stages of what is basically a populist revolution. And how it plays out is anybody's guess, because it depends on people who are sitting around a conference table who don't completely understand what's happening and are under a huge amount of pressure. And then they're making decisions and implementing policies. So I think it'll be extremely messy. But there are policies that might work. If we bring back manufacturing to the U.S., we have a real potential of success here, because North America has huge advantages. And if the U.S. and Canada and Mexico are basically one big economic entity, and Mexico has the workforce, Canada has the natural resources, and the U.S. has the technology and the design and a lot of the factories, or a lot of the high-end factories, then that's an economic coalition that can survive in a chaotic world. So that's possible. And but we got to see. Nothing is guaranteed at all.
No, it's interesting. Like the tariff debate, of course, is a big one, and I just keep reading. Like Mexico's President Sheinbaum just said there has been good communication with Trump. Sheinbaum also said we have reached deals. Markets continue to wait for trade deal announcements, of course. But it seems like there is some sort of movement, and I'm not going to say tariffs work just yet. I need to see some results and deals being announced, but it seems like the attention of the proposed Mar-a-Lago Accord, I forgot what the original paper by Stephen Mirren was called that he published in November, but was to sort of use tariffs as a negotiating tool. It seems to be working. People are coming to the table. They're all dialing 1-800-NO-TARIFS, please. Mm-hmm. And it seems to be working, right? Would you agree? Is at least bringing people to the table? Do you think it will be positive? Does the U.S. actually hold the cards?
Well, yeah, I think it's reasonable to see Trump's tariff policy as behavior change, an attempt at behavior change around the world. They want people who have factories in other countries to set up their factories in the U.S. And so he doesn't intend to do away with the income tax and finance everybody, finance the government from tariffs, because he says that sometimes, but that's a bargaining posture, right? What he really wants, like you said, is for everybody to come to the table, propose zero tariffs, just getting rid of the whole thing across the board, because it's too much trouble to go in and redesign every little trade policy, and then for it to be in the interest of other countries to set up factories in the U.S. so we get our manufacturing back. And the U.S. has enough leverage to pull that off in some cases, at least, because we're a very big consumer market. Anybody who wants to operate on a global scale has to be able to sell to the U.S., just like it used to be with China. You had to have a relationship with China to be a global player, and the same thing is true with the U.S. So Trump is, in the coming year, because he basically has 2 years only. He knows that the midterm elections in the U.S. could hand Congress back to the Democrats, and then the government is just hamstrung. It's over. So Trump has until November 2026 to basically get lots of factories back to the U.S. and to strike basically free trade deals with a lot of big trading partners. So we'll see if that can be done in time. But like you said, you are seeing countries come to the table and say, all right, what do we have to do? See, that's been Trump's strategy for his whole life. That's how he does real estate. Like if there's any kind of an issue, he sues you first and foremost. His lawyers call you up. And then your calculus becomes not how can I squeeze as much as possible out of this guy? It's how can I make this stop? And so that's what he's doing with the whole world. And it's not clear you can do what you do in real estate to the whole geopolitical world, right? Nobody's ever really tried that before, but I think there's a decent chance it succeeds in some cases, and that those cases are enough for Trump to declare victory 2 years from now when the midterm elections are just getting underway. So we'll see, but that's one best case scenario for the U.S.
Now, it's interesting. I watched an Howard Lutnick interview the other day. I forgot what channel it was on. Doesn't really matter. But he said, well, we're looking at this from a... he said company instead of country, and then he corrected himself quickly. I thought that was really, really interesting. It was a bit of a Freudian slip, I'd say, because maybe they are running the country like a company right now and trying to get it back on its feet here. I'm not sure you can really do that. There's a lot of levers, and it's really complex, beast or animal, the government and a country. But I thought it was an interesting tidbit here. You just mentioned November 2026, midterm elections. Now, the question is, and I meant to ask you before, but you gave me a bit of a time frame here. Do you see a Bretton Woods 3.0 agreement, or at least the attempt at one around that time, before then or after then? What is your estimate?
Well, I think there's no way to know. We're heading into the death spiral part of this, and that means it'll be chaotic. So we can't know. Oh, and it also means that, first of all, you've got the people running the global financial system operating on Keynesian economics models, which are totally flawed models, which don't work at all. So there's no way to predict what they're going to do because their models no longer describe the world as it's evolving. And if there's a trade war going on at the same time that all this other stuff is happening, trading partners have power with each other, and so you could see a lot of things that are magnifying the chaos that would normally flow from having too much debt and having interest expenses explode. So there's no way to know how this works out in terms of timing. So I have no idea, but I think
it's
lots
sort
of
of
things happen at once.
It all seems to be leading somewhere, and maybe it's 2 years from now, maybe it's 5 years or 10 years. But since you gave me the thought of November 26 here, which is coming up very quickly. It's only a year and a half away.
Yeah, well,
at best, right?
That's the political timetable. The current government in the U.S. has that amount of time to get their stuff done. And the opposition in the U.S. has that amount of time to stall. And so that's the battle that's going on right now. Everything that Trump does ends up in the courts, where judges and the people that appointed those judges are trying to drag this out for as long as possible. They'll shut down a program, and then it goes to the appeals court, and then something will happen there, and then it goes to the Supreme Court, and that's a long process. So the opposition right now in the U.S. is hoping that the process is long enough that Trump gets nothing done for the next 2 years, and then they can run against him as a complete failure and a chaos agent and everything. And that's not impossible. That could happen. Trump, on the other hand, wants to get everything up to the Supreme Court right away, find out what he can do, and then just do it. Flood the zone with programs in every sector of the federal government based on what the Supreme Court told him he can do. So we'll see. It's a big race right now. It's fascinating and unprecedented, and really interesting if you're not terrified by the implications of it.
No, it's just, I love talking U.S. politics because it takes the spotlight away from European politics and German politics, so which I'm quite frankly ashamed of speaking about. So that's why it's easier for me to talk about U.S. politics sitting here in Germany than it is about German politics, right?
But European politics is so interesting right now. It's I wouldn't say it's more interesting than U.S. politics, but it's right up there because there are Trump MAGA coalitions forming all over Europe, and they're going to try their own revolutions here pretty soon. And the establishment in every major country is doing extreme things to try to stop that from happening. We're seeing a lot of authoritarian stuff happen now, where they just cancel elections or they ban political parties, and that's very ominous. But that kind of happened in the U.S. over the last few years, where the people in charge were willing to do things that are clearly unconstitutional to get what they want. And Europe is so big. We see Americans, we tend to be just parochial, because the U.S. is big enough that it can absorb all your attention really easily if you live here. So we don't really watch the rest of the world. But I think we should be watching Europe right now, because you guys have some fascinating stuff going on. For instance, do you think
scary stuff?
Nigel Farage might be the prime minister of Britain in a couple of years, and you guys have something similar going on. What's the name of the far right party again?
AFD.
Yeah, the AFD. Yeah, I mean, is it conceivable that the AFD is the party in power in 2 or 3 years in Germany? It seems like
they're trying to ban it right now.
Yes,
they're working on
exactly.
banning it.
Yes.
So. Like, if they keep that up, they actually might end up in power because people are just starting to get enraged with it.
Well, yeah. I mean, that actually helps a party when the establishment tries to ban a political party and they use illegal means to do it. That attracts more votes to that party, right? It's the kind of the Streisand effect, is what they call it here. It's when you make something taboo, it makes it way more interesting.
It's mind blowing, like how that's actually possible, like in Germany. This report is like, of course, the AfD has some very far right extremists on their side, but it's a small fraction. There's a lot of like economic conservative individuals that are actually quite smart when it comes to economics, for example, right? And some of the politicians in there, yes, they're difficult to deal with, but so is so they are some on the left. Even in the center party. I'm not sure how we ended up with a red and black government again, with the minority partner, there's 16% of the votes getting 7 ministries. It's mind-blowing, out of 16. So how is that possible? Like, they got 16% of the votes. The AfD at the time got about, I need to lie, 24%, roughly like that. Well, they were clearly the second strongest party, and they keep rising. They're above the CDU now, the right-wing, or the conservative right party that won the election. But they're stronger now, and now they're trying to ban them. Like, they've labeled them right-wing extremists, so they can monitor them more effectively. And it's an interesting debate. Like, I'm still reading up on the whole thing, how it ended up there. Whether it's just some vendetta of the outgoing government right now, or if there's more to it. I already hear there's some issues of like actually going through the proper motions here with what has been going on about declaring them as right-wing extremists. So it'll be interesting. It's a story to follow.
It really will be, and so much of it comes back to immigration, right? Until that is sorted out, you get political chaos because that's so polarizing. So we'll have to see how that goes too. And I suspect
Energy
that,
politics is another one.
oh
You know,
yeah, energy.
that's another big one. Like you can't pay 35 cents a kilowatt hour over here. It just doesn't make any sense. And then the CDU ran on at least partially, like ran on the program that we're going to restart the our nuclear reactors. The second they're voted in, no more discussion of that. It's not feasible. They're already being dismantled. Blah 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 blah. It doesn't make any sense. We'll look at diffusion, which is going to be commercially viable in 2045. Okay.
Yeah.
So like.
So you end up with the left basically in charge of a lot of things, even when the far right and the moderate right parties get most of the votes, because those two,
Exactly.
The guys on the right cannot work together. At least they don't feel like they can yet.
There's a Brandmauer is the word we're using. So like a burning wall, sort of, that we can't, that the two right-wing parties can't really work together, as you said. So they call it Brandmauer. It's like we're putting 30% of the people in Germany are being just discriminated against. Of course, some of them are hardcore, fine, whatever. But so are they on the left. But we're discriminating 30% of the popular vote right now.
And it's kind of an East-West thing too in Germany, which is another interesting part of the story, because it's the old East Germany that is the most conservative, and West Germany is the most liberal. But then Eastern Europe overall is kind of like that, right? Because Hungary's fascinating. It's like 10 million people. They have so much sway, or at least they have so much mind share in the EU right now, because Hungary's kind of leading the way, even though they're a small country to begin with, and they're really consequential. So fascinating.
Yeah, they put their foot down in the immigration debate, for example, when the refugee crisis was going on. It's like, no, guys, we're not taking anybody here. Like, they put their foot down. They were really clear about their where they stood.
And it's such a reasonable point of view. The Viktor Orban is like, well, we want to be a Hungarian country. We want to keep our culture, and you can't do that if you let in, a million new people versus 10 million existing people. So they're just not going to do it, and that makes eminent sense to a lot of people, I think, who would like to preserve their culture. They don't feel like that makes them racist. They just want to be who they are, and so that's a really interesting political dynamic too, because a lot of people totally disagree with that. The open society concept is that we should all be basically a mixed society of lots of different cultures, all there together, getting along and everything. And so it's kind of the U.S. melting pot idea, but without the assimilation. And yeah, it's not clear how that works either.
It's not easy, quite honestly. It's not an easy. There's no easy fix either for that debate, right? But a bit of what do we call it? Conservative national thinking, like even in Germany, we only fly our flags when the German soccer team plays. You barely see any German flags out any other time. It's just a little more traditionalist thinking. Traditionalist, maybe. That doesn't mean conservative, but traditionalist. Like, nothing wrong with that. Like, that's one of the reasons I actually love traveling to Munich personally, because tradition is alive there. People wear their lederhosen when they go out on a Friday with their friends or so, put on some traditional gear to have a beer. I kind of like that. Nothing wrong with it. So I think we need to get back to that a little bit more and just understand who we are and where we come from. So enough of that. John, I was trying to make the segue to gold, talking about Bretton Woods, and we really need to talk about gold and what's been going on, what's been pulling on gold. I don't think it's just currency. We touched on geopolitics as well. What do you think is the biggest driver of the gold prices right now? Like, where do you see the most influence coming from?
Well, I think the meta part of gold story is that we're just destroying all the world's fiat currencies, and we're going to have to go somewhere else. And gold is, historically speaking, the logical place to put your money when the currencies that your governments are running are being mismanaged this brutally. So there's going to be demand for gold in this kind of a situation regardless. And there's just all those other things going on that we talked about earlier, where the banking system regulations are changing, and you've got this kind of geopolitical thing going on between the U.S. and the BRICS countries, and it all points towards real assets. So I think that, bull markets have big corrections. So I don't want to say you got to buy gold right now because you could easily see a correction back down to $2,000 an ounce or $2,500 an ounce. That's just the way bull markets work. They shake out weak hands. So this might not be the best time to jump into gold with both feet, but gold is something that should be accumulated because the currencies that we use to measure the gold price are declining in value so dramatically. Now, the question is from there, do we want the gold mining stocks? Because
John, before we get let me jump in real quick before we get to the mining stocks real quick. The bear case for gold. You said it could go to 2,000. I know you're just trying to make a point here, but lay out the bear case thesis. Like, what needs to happen for gold to drop so drastically? That's a 50% or 33% drop, in the gold price roughly. Like, what do you see that could trigger that?
Well, the bear case for gold is that we tip over into another recession. Because look at it historically. Back in 2006, 2007, 2008, we were beginning to tip over into a recession, and that it hit in 2008. And stocks just tanked. We had a brutal bear market in equities, and that pulled down everything else. Gold and silver both went way down for a while in 2008. And then the government stepped in and central bank stepped in with massively easy money, and everything went back up. But you had this V bottom in precious metals that had really nothing to do with precious metals. It was just that stocks were tanking. The banking system was on the verge of collapse. And maybe gold was the only thing that hadn't gone down yet for you. So you had to sell that because you were going to get margin calls on your banking stocks and your tech stocks. That could happen again very easily. Gold, let's say gold holds up. Tech stocks roll over, everybody gets terrified, and then you could easily see selling in precious metals along with everything else that takes gold and silver down harder than is easy to imagine right now. Just because panic, when people are panicking, they do extreme things. And that could happen. If it does happen, it's an extreme buy the dip situation for precious metals. Because governments will have no choice but to devalue their currencies when the next big recession and equities bear market hit. So you'll see the central banks coming back in with, 2 percentage point cuts in interest rates, and a lot of the countries of the world will go back to negative interest rates. All of that is coming in the next recession and equities bear market. Gold and silver won't be, well, they might not be immune to that, because it's possible that this time around that people understand what's happening, and they've got enough recent history to see that central banks are going to come in aggressively with easy money the minute the NASDAQ drops by another 20%. And I want to own gold for that. And so gold catches a bid in anticipation of that easy money. In other words, there's no real way to know exactly how this plays out. And there's a risk to precious metals as we head into a recession. But there's also a big opportunity there if they get smacked in, say, a 2026 equities crash or something like that. So again, don't jump with both feet into anything. Just accumulate a little bit at a time and assume that you're going to be okay in the long run. Keep the ultimate prize of $10,000 an ounce gold in mind, and then it makes these squiggles along the way less scary.
Absolutely. John, I apologize. I stopped you when you were just about to go on into the mining stocks. And now let's talk mining stocks, John. They haven't really behaved in the way that we expected them to behave just yet. It sounds like we're getting greedy. GDX is up roughly 40% year to date. Sounds like we're being extremely greedy. But gold is also up about 27% here. So the mining stocks should be up, 90%, not 39%. What do you make of that?
Yeah, that's been one of the really surprising things about this precious metals bull market, because normally, they call gold and silver mining stocks leverage plays on the underlying metal. In other words, they're like options that you buy if you expect gold and silver to go up, because those options will go up even more. You have a leveraged bet on gold and silver. Didn't happen this time. And I think a big part of the reason why it didn't is that as gold went up, so did the cost of gold mining, because oil was up, and wages are up everywhere, and that was making it more expensive to mine gold, which canceled out the higher gold price for a lot of gold miners. It stopped them from being able to report dramatically higher earnings and cash flow. But then lately, the price of gold has gone up enough to more than offset the cost of gold mining. And so you're seeing a lot of gold miners report pretty good numbers. We're in the middle of earnings season right now. So your audience should be watching what the gold miners report, because a lot of them, they're seeing gold be up by almost $1,000 an ounce over the previous year's first quarter and second quarter. And that's giving them massive cash flow, because their costs are up some, but not that much. So all that extra cash is just flowing down to the bottom line, and that makes a huge difference. So I think that if gold doesn't crash from here, if we don't get a big correction, and gold holds its own, then the gold miners are going to be a really attractive sector, because first of all, they're going to be putting up really good year over year comparisons just across the board, from revenues all the way down to free cash flow. And then they're going to be using that free cash flow to improve themselves. They'll pay off their debts, they'll raise dividends, they'll buy back stock, maybe they'll make strategic acquisitions, although that's a good news, bad news thing for the mining industry. But in general, they'll become better companies thanks to all this free cash flow. So you've got the excitement that comes from a bull market, and then you've got the improvement operationally and financially for a lot of these gold miners. So I think it makes them really attractive, and I think it's the kind of thing that will draw in generalist money. People who don't normally pay attention to the miners, but they're going to be running screens for earnings momentum or price momentum or free cash flow or whatever. And the gold miners will start jumping out at the investors on those screens as something where something really good is happening. So they won't necessarily understand the mining industry, but they'll see that big progress is being made on the measures that they like to look at. And so even if a little bit of generalist money starts flowing into the mining sector, that's a huge deal for the mining sector, because it's tiny compared to the amount of investable capital that exists in the world. And I think that's something that's very easy to envision for the year ahead. Just let gold hold its own, not crash. And then these miners are just going to be really impressive companies. They'll be generating great numbers, and they'll be doing smart things, and you'll have to own them.
Absolutely. Oil is also coming down, adding additional leverage as well. So when you talk about costs, I expect them actually to come down in Q1 because the oil price has been weaker and wage growth has slowed down as well. So unless they show up, the miners are always figuring out a way to, I wouldn't say screw investors, but they come up with ways that you don't expect, like write-offs on certain assets that you thought were going well, but all of a sudden it's a write-off, like Newmont maybe writing off the coffee acquisition or something like that. All of a sudden there's a loss on the balance sheet because they don't want to show any gains, of course. So things that trigger us badly, right?
Well,
but in general, I agree. Absolutely.
Acquisitions are the things to watch out for, because when you got a lot of free cash flow coming in, it becomes very easy to start thinking about building an empire, buying somebody as big as you. So,
Goldfields announced a merger this morning, buying Gold Road Resources, $2.4 billion merger, South African company buying an Australian gold miner, or buying the 50% of an Australian gold miner they were in a joint venture with. Annual production, 325,000 ounces, but they also own an interesting share of another Australian miner. Forgot the name. It might be De Grey, might be wrong there. But it's starting to happen. We're seeing some more of those deals. Where else should we look? Like the big miners haven't really moved. Like, what's the best place that you're looking at right now? Like, are you looking at the majors in general? Like, I know they're sort of the indicator of where things are going, but where do you see the most leverage?
Well, I mean, the leverage increases as you go down the food chain in mining, but they're all interesting in their own ways, because the big guys are going to be reporting really nice numbers going forward. And they pay dividends, so they're going to raise their dividends. And all of a sudden, if you're an income-oriented investor, they become interesting. So that works for them. And then the mid-tier producers are logical acquisition candidates because they're known quantities. You don't have to worry about the next set of drill results or anything because this mid-tier is already producing. And they become interesting acquisition candidates for the big guys because that moves the needle right away for a Newmont or somebody if they buy 500,000 ounces a year of production that way. And so they'll pay premiums to get the best junior miners. And then further down is the explorers, which they've been such a mixed bag. Some of them have done great, and others have just gone down by 90% in the last couple of years, even though they looked good. But the best of the explorers are going to be very valuable going forward, and they're going to be taken out at extreme premiums to today's prices. So it really depends on your risk tolerance. The big guys are a known quantity, very little risk there. And at the other end of the spectrum, there's some extreme risk, but some 10-bagger potential. So it just depends.
Just depends. John, the one thing that puzzles me the most so far is that the single asset producers haven't made any moves, really. I'm thinking of the Torex Golds, the K92s or so. They're all decent producers, but they all have single asset risk. One is in Guerrero, the other one is in Papua New Guinea. Not the best jurisdictions per se. They haven't really made a move yet. Any speculation, any idea why that could be?
Well, it could be that some of them aren't big enough to move that proverbial needle for Newmont or somebody. And also the jurisdiction risk is turning into a really big deal out there. For instance, the government of Panama just closed one of the world's biggest copper miners and cost the owners of that mine a ton of money. And Mexico is talking about nationalizing its mines and banning open pit silver mines. And so you just don't know. And what was the country that just indicted barracks management?
Mali.
It was in Africa. Mali, yeah. Okay, yeah. So they actually are, trying to jail some of the gold miners in their country. So that's the kind of thing that makes you nervous if you're an acquirer. If there's a junior that has one mine and that mine is in Mexico or someplace like that, then all of a sudden that one mine has to be just phenomenal to be worth the risk that you're taking on. Because you don't want to be the country that owns Cobre Panama copper mine again. You don't want to be in the news for something like that. And it doesn't look like it's going away. A lot of countries that were great jurisdictions are turning into less attractive jurisdictions. And don't get me started on Canada now. Canada used to be the best jurisdiction, and now it's not clear where the new government is heading when it comes to mining because, net zero as a policy is not a mining-friendly idea, right? And so we'll just have to see what Canada's like. But that's a very big deal in the mining space. And that's also part of the reason why the miners didn't go up as dramatically as they would have otherwise, because you had a lot of this geopolitical stuff out there that is just scary and unnecessary. You can buy one of those physical ETFs and get the move in gold or silver without any of the mining risk. And you can buy a royalty streamer, royalty/streaming company, and get the upside of new mine development out there without the extreme risk of having one mine going bad, blowing up your whole business model. So the miners, because of geopolitics, look a lot riskier than some of the other ways of investing in gold and silver do right now. And so they have to generate way more cash flow in order to offset that. But I think they're doing that. So I think it's going to work out. But they do have their issues that some other potential investments in gold and silver don't have.
Absolutely. John, very last question, or second to last question. Silver hasn't moved at all. In comparison, it's roughly kept pace, of course, with gold, but from historic performance, we know that silver should outperform gold, and yet it's not even making, it's not even, flinching. What do you make of it?
Yeah, if a few years ago you said, I guarantee $3,000 an ounce gold, I would go out and buy silver because I'd expect it to be $100 an ounce easy if gold is 3,000. That's just how it's always happened historically. Gold goes up, silver languishes, then gold goes up some more, and then silver just takes off and goes straight up and outperforms gold for a couple of years. Well, now the story with silver is it's a great story. I think we should definitely still be owning a lot of silver because it's an industrial metal. It's in deficit. The demand is exceeding the supply. So if it was just an industrial metal, it would still be interesting. But it's also a monetary metal that trades in a range with gold, and it's at the upper reaches of the gold-silver ratio. In other words, it takes almost more silver ounces right now to buy a gold ounce than ever before. There's just been a couple of times when it ticked up above the current 101, 102 level. And in every time it's been in this general range, silver has outperformed gold going forward. So there are reasons to think silver is interesting right now. The worst case scenario, the risk with silver, is that because it's an industrial metal, a deep recession would scare people into thinking that the demand for silver is going to go down. That takes away the rationale for the price going up, and don't bother with it right now. That's possible too, which is why you, again, don't jump in with both feet. Buy some silver when it's cheap, and then next month buy a little more dollar cost average, or if you're buying silver miners, use lowball bids and also dollar cost averaging. Just do it a little at a time. Just stack and let these big trends work themselves out, while the smaller squiggles that you can't predict in any event do their thing, and just don't worry about them. Just use corrections to increase your stack, and then just keep going from there. But in general, I own a lot of silver. I own way more silver in relation to gold than I wish I did, because gold has outperformed silver lately. But I think that there's a very good case to be made that silver is one of the most undervalued assets in the world right now, and that $50 silver is just about a no-brainer at some point in the next few years, with $100 silver being completely believable. It's totally possible. You don't even need crazy things to happen for silver to get to $100 an ounce. So own some. Just don't go crazy with it.
Excellent advice. John, really, really appreciate your time. Thank you so much for coming on. Very, very insightful. Where can we send our audience? Where can they find more of your work, John?
Well, I'm at rubino.substack.com, and I publish a newsletter there on Substack that covers the stuff we just talked about, with a focus on actionable ideas for it all.
Fantastic. John, thank you so much. Really, really appreciate it. We'll have to do this again soon. Maybe in person again over breakfast.
That sounds good. Thanks, Kai.
Love to do it again. Absolutely. Thank you so much, John, and everybody else. Thank you so much for tuning in. Really appreciate you watching Soar Financially. I hope you enjoyed this discourse about German and European politics yet again. I know you did last time when I spoke with John, so I hope this was insightful as well. I still need to get around to doing more in-person interview, just interview myself more or less, and go on little rants and tangents by myself here. If you think that's worthwhile and something I should explore, let me know in the comments down below. But in the meantime, go check out John's Substack. Really, really good information, really good insights. I'm a subscriber as well, so make sure to follow him. Thank you so much for tuning in. Hit that like and subscribe button. It's a free way to support us, and we thank you for it. Thank you so much. Take care out there.